Welcome to the January 26, 2026 Advance Report for McGowanGroup clients. Thank you for tuning in. What a news week it was. Now, the week started with Trumpian hyperbolic negotiation over Greenland, right? There's going to be a big fight with Europe. Davos is coming up. And of course, we wake up and tariffs for everybody again. Well, the market did its tariff dance. Boom. That's what we saw to open the week. And the thesis was this is going to disrupt global trade. It's going to cause big inflation. Nobody likes him. And there were market impacts that rippled throughout the world. And I'm going to show you those, along with a huge change in market leadership this week. That was a wow. So the Dow's now up a little over 2% for the year. That's not a bad month, right? You annualize it, that's doing okay. And I'll show you one of the reasons coming up. All right. But the NASDAQ, only 1%. Remember, the NASDAQ tech stocks were leading, and that has shifted. It shifted dramatically. When you start to see money flows completely different than, say, a month or two ago, you wonder, how do we build that into the McGowanGroup wealth management portfolios? By the way, I'm Spencer McGowan, your financial weatherman and president, McGowanGroup Wealth Management. We love our clients. We serve affluent families right from the Crescent here in Dallas. Dallas becoming the financial epicenter of the universe. We like that too. It means there's going to be lots of good financial services professionals to join the team. All right. Whoa, what's that? Gold and silver just went bonkers over this. Part of that money flow is, yes, it's in a big uptrend, but something else happened. So silver, almost $100 per troy ounce, hit 99.9336 at the high tick of the week. Wow. The silver, scruffy little silver, all of a sudden is just shiny as it can be. Part of what's happening also in the gold market, 49.67 per troy ounce for the first time in history. Well, you had the imposition of sanctions. You've got Russia, China, Brazil, right? They got to find a different way to trade. So the ne'er-do-wells, if we said formerly Venezuela, also China, Russia, Iran, they needed to be able to transact business around the sanctions. And with the seizure of oil tankers, you're starting to see, oh my gosh, how does that economy work if they can't be part of the banking system? And that's part of the thesis. Now, there's more to the story, but I do want to cover something. This happens to be a 50-year chart. So right about here, everybody's like, hey, do I buy gold? Look at gold is making the most money. Silver making even more. Do I buy it? I want to give you a lesson. We're going back to 1976, 50 years ago. Gold spikes to 800 per troy ounce for the first time in history. Huge inflation. Okay, well, that would seem like, well, we ought to climb on board because we've got 1970s inflation and there's global disruption. And Reagan was getting bad press as he took office. So lots of reasons that you might want to buy that. Look at this. This is 2005. Wow. So by the time you got 20 years out on this trade, you got no income, and the central banks invented the SWIFT system and they could hold each other's bonds, and that technology advancement said, well, we don't have to move gold around Fort Knox anymore. We can just transfer. And they went to 225 per troy ounce. Ouch. So not only did you lose about 2/3 of your money, but you didn't make anything. You're minus 2/3 and inflation doubled prices. So really you got about, I don't know, 1/6 of the money left. But then, so finally it catches back up around 2005. That was 25 years in the desert. That's not fun. Here we hit 1100. Boom. Now we get to 1200 per troy ounce. Actually went to 1100 and now 49.67. So everybody's saying, well, should I pile in? Well, here's my thesis. First, I don't get paid. I'm going to show you some stuff that pays you. And it's part of the McGowanGroup Wealth Management Portfolios, not a recommendation for your plan till you come down and get one from the team that cares. Now, you can go to networthradio.com and contact us. All right, now let's look at this. Remember, this is a 50-year chart. So we go 1,100, or we go from almost 2,000 down to 1,100. And how long were we in the desert? 2024-ish, right? So I did how many years in the desert? Lost nearly half my money, don't get paid, and I was stuck for about 11 years. That's intolerable for a substantial portion of the assets, not to mention losing inflation-adjusted 5/6 of your money here and being 25 years underwater. So when do you buy gold? Well, looks to me like you want to wait for a major collapse. If you didn't catch this run, maybe you hold off, because every housewife is going to be taking your gold medallions and the bracelet you never wear, and she's going to be running that over to the jeweler to cash in, and you won't even know, and she'll get some tax-free cash. It's exactly what happened in 1980 back here. They had like gold parties, and they would sip rosé and sell all their husband's old jewelry that he never wore, and he never figured it out. All right, here, Energy Transfer. Wow, it's up 10.4% for the year. That's a pipeline, right? And you take the S&P Oil and Gas Index. If the NASDAQ is 1 and the Oil and Gas Index is now 11%, it signals a shift in market leadership. Wow. Here, there's the ExxonMobil. It's up 13% for the year. And here's one of the reasons. Natural gas was up like 70% this week. Wow. Yeah, the Arctic blast coming. And, you know, those are temporary phenomena, but it sucks up a lot of that extra gas, right? And this spike is a cycle high for natural gas. That's one of the reasons oil and gas index popped back up. Oil hit nearly $62, and I'm not sure why. I'll figure it out by next week. All right, this is Plains All-American. Has a big old fat yield, and it's up about 7.5% for the year. Oil and gas have to flow through the pipelines, and the pipelines get paid like a tollway. Remember, not a recommendation for your portfolio until you get a written plan from us. Whoa, the positive news just rolled in at the end of the week. I mean, it was huge. So first, earnings are coming in 17.65% above last year. That growth rate addresses the artificially high multiple in the S&P with earnings growth. Now, it's only 62 out of 500 companies. So you want to subscribe, because we're going to keep you updated as we go through the fourth quarter earnings announcements between here and the end of February. All right. Whoa, what's this? I want to put the economic growth numbers in long-term context. So Stephen Norris, Super Chuck Norris, our head of trading, he made this Bloomberg graph for me. All right. So we go back to 2006. There's the big pandemic, right? Year over year GDP. This is bad. And this was the shutdown in 2020. But whoa, it rebounded. That's the first time, I think that's one of the first times it ever grew at 12% in history. But that was the rebound from the pandemic. But where am I? I am right at 2% average for this 20-year period. So that's normal economic growth. 1 is anemic, 2 is okay, and 4.4%, wait a second, 4.4%, that's Q3. That's Q2, 3.8%. There's the minus, right? And so everybody doesn't like Trump says, oh, you know, the tariffs are bad and we don't want to buy anything because we're all going to die in a recession globally, and there's going to be huge inflation. This is going to be really bad. And what happened? Deregulation took hold. Wow. You make more stuff, inflation comes down, and you have huge growth in GDP. 4.4, that's over double GDP average for 20 years. But wait, there's more, as you would expect from McGowanGroup YouTube. 5.37% is the Atlanta Fed's latest estimate for Q4. Now, the government's not going to catch up because they're still mad about the shutdown, but eventually they'll announce it, and Atlanta Fed has been spot on with their estimate, which is why we bring that to you when it's relevant each week. If you take all of last year, you're going to clock that at about 3.4% if you add the quarters up. When you go to the Federal Reserve, the National Federal Reserve, their projections at the last meeting, they said 2025 will come in at 1.7%. They were off by half. And they get all the data. They got all the PhDs. What are they doing up there? All right. So this will come in at around 5.4 quarterly GDP, according to the Atlanta Fed. So that's 3 great quarters. As a matter of fact, it signals a historic economic boom despite everybody whining about affordability. Now here, I've got the natural gas rally in context. So I go back 20 years on this, well, this is 10 year, right? And I can see there's the invasion, and now we're at a cycle high, elevated natural gas prices, good margins for the companies. So energy infrastructure is part of the portfolios, the well-managed portfolios here at McGowanGroup Wealth Management. We look forward to serving you and your family in the year ahead, and may you enjoy peace and prosperity. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You could see our performance track record.